Hello everybody and welcome back to another video. So I just want to go ahead and get started right now on the Russell 2000. Russell 2000 is putting in a little bit of a higher low here, it seems. Right now we're on the hourly chart of the futures here for the Russell 2000. And if I just scale back to the daily chart, we're still at extremes. As you can see, that's the lower high there on the daily time frame, and we are within our critical level here, as I've been talking to you about for a few weeks now. The Russell 2000, although the chart remains totally bearish here, the daily chart is bearish for now. The 4-hour chart of futures is still bearish for now. The 1-hour chart of futures, although is it's still bearish. Actually, it is still bearish. Maybe the 10 is trying to come back up above the 20 here to maybe turn momentum in favor of the bulls. But I mean, right now, there's nothing really telling us that it is bullish, but we are getting higher lows, and these are levels where we could be seeing a reversal happen for the Russell 2000. We've had a very brutal sell-off here since July. NASDAQ and S&P have gone kind of sideways. Russell just went straight down, and it is due for a bigger bounce now. We don't know how big the bounce is going to be, but right now, as you can see, we are still forming some divergences on the MACD. All right, so as you can see here, if I look at the MACD, we are forming some bullish divergences. Well, actually, the 15-minute chart isn't forming any bullish divergences, but we are getting them, I think, here on the hourly time frame. As you can see, we have the bullish divergence between these two lows, and I told you, I have been telling you to be watching really those bullish divergences that tend to form under important levels of support, because that's when everybody loses hope. When it gets down here, we've been looking at this trend line. It's back up here. Let me just go on the daily chart to show you this. Back up here, when we rallied all the way up here, this trend line, if you were to draw it, that thing looked really far, and a lot of people did not believe that we could get there, especially when we're at the top of this candle right there. But we did end up crashing back down to it. So when we start tagging it here, everyone's like, okay, that's the bottom, because we just had a brutal sell-off. And then what do? They bring it up a little bit here after, I mean, look at this sell-off. How much was this? That was a 6.72% there on the Russell. And then they let it rally a little bit here, go sideways, and they push it one more time under the big trend line of support. You see what I'm saying? So once it gets down here, I bet everybody's selling. I don't have the volume right now, but possibly, I'm not saying it is, but possibly, these are areas where we're getting a little bit more volume here on the Russell. It would make sense to me, because this is where accumulation would be taking place, under these levels, when everyone is terrified and the fear and greed index is back at extreme fear. That's where the shares trade hands and they go to the smart money from the dumb money. Same thing right here. As we're dropping right here, everybody sees thinks the bottom is out. The bottom is out for the Russell. Excuse me, but it's really not. Like, this is the area where it's starting to bounce. We formed a little sort of a spinning top there, spinning bottom, whatever you want to call it, doji looking kind of candle. And then the next candle was just straight buying. We didn't even go look at that. We had a tiny little wick there of 1/10 of a point here on the Russell before starting to move up. We came back down at this level, which made total sense on the Russell 2000. And in my weekend update, I'm pretty sure I talked to you about this right here. This area was accumulation, and you want to be watching when you have these little things. I've told you this multiple times, and if you go follow me on Twitter at @the_bucket shop, you'll be able to see my tweets in real time where I talk about all these things. I tweet a lot during the day, so if you want those updates, make sure to follow me on Twitter. The link will be in the description. But this is what you're looking for, because this is accumulation, and oftentimes you pull back to the top of these little waves. Okay, you pull back to the top, and when you get that, that's the area of support. That's why I had this box drawn in, and we went right to that box. We went under it. Okay, we came into this area, but we formed a higher low, and then we started rallying back into the moving averages. We formed a higher low. Okay, another one from this little bottom, and now we're rallying back up, higher high. We're testing the 200 at the moment. Are we going to be able to break this peak for the Russell? Are we going to be able? I'm sorry, Jesus. Are we going to be able to keep bouncing off of the 50-period moving average, off of the moving averages in the time frames? Are we going to be able to keep moving up and really take this high next? This is the big level for the bulls, because they can take this. It means the moving averages are starting to turn bullish, and it means the market is looking a lot better, healthier. Maybe like a recovery is about to come in. So swing traders and other people can start coming in, But at the moment, Russell 2000 is still terrifying. Let's just go ahead and move up to US 100, the Nasdaq. Nasdaq is interesting, and I posted this on my Twitter this morning. We had this little sort of triangle here, and it's interesting because we didn't break to the downside. We didn't even test the lower boundary again. Right now we're attempting, we broke out over these highs a little bit, got rejected. Now we're climbing back towards them. Are we going to be able to get a higher high here, or do we get a lower high and maybe have a false break, a false bear fake here back to this bottom trend line right here to this level, or maybe even to the lows here to really test new demand, and that way the market will be able to really tell once that happens. If that happens, that is a move to critical, as I've been telling you for a long time. Jesse Livermore, famous trader, he used to look for those kinds of setups where the market goes to a critical level. Whack off distributions is kind of the same thing. You always want to look for those levels where it tests demand or supply. And in this case, demand is sitting right around this area. So if we come back down to this trend line and bounce, we'll be testing demand. If we break this low, then we'll really be testing demand, and you'll really be able to see if we get buyers commit through and you get a big wick here and just a slingshot up. That's a great sign there that the market is about to move in your direction to the upside. So right now, US 100 moving averages on the hourly time frame have turned semi-bullish because the trend remains down here. The 50 is under the 200, but momentum for the moment is up, which is why I'm saying, yeah, it's going up for now, but we could still get a flush out kind of demand test here. Because the moving averages are still below the 200. We still have a little bit of work to do here to get those back above the 200. Now, if we start rallying super strong, that could be it. We can start bouncing off of them once again. I told you, I posted a tweet, right here this second, like around this candle, saying if we can bounce off of this green line, then it's a good sign for the bulls. For now, we're bouncing off of it, but we're stalling right here below this high. We want to see if we can take that high, okay? If we can't, maybe we get a flush out move, like I said. But right now, momentum, which is the red and the blue line, is above the green line. So this is telling me that momentum is to the bulls. We could be going sideways. We are going sideways around the 10 and the 20 for now. So we'll be watching to see, is this the bottom right here? Or do we get a last little test? I think this was the bottom on a closing basis. Maybe we get one more big wick that kind of comes in and takes out the stop losses, and where all the smart money makes all of their trades there. They get all their shares in before slingshotting it up. But we'll be watching to see what happens on Nasdaq. We have this beautiful bull flag. If we rally, take this out, and then rally, it's going to be a very, very interesting rally that's coming here for the Nasdaq. I think it's going to be powerful, and I think there's going to be a lot of money to be made. I do also want to just speak about the S&P for a second. Let's see if I can find that. US 500 here, futures for S&P. S&P is up big. I think it's up over 1% last time I checked. Up 1.17% there on the daily, getting some sort of reversal kind of candlestick there. As you can see, we closed once again below support, below the wedge level, and we popped right back into the wedge, came back, tested it. Let me look at that. It's beautiful. See what I'm saying? You close below the wedge, you form a divergence. Once again, the trading system does not change. You always look for the same setup, and you want to perfect that setup. You want to perfect the entry points. You want to perfect looking at the different charts to get your entry points. That's how you want to perfect your trading system, whatever trading system you have, But for this one, as you can see, once again, you form a low right here. You rally up a little bit. They drop it below support, and then divergence forms on the hourly time frame, and now we're starting to get a little bit of bullish momentum. S&P has made a higher high here as the 10 and 20 are trying to cross above the 50. The 10 is above the 50, the 20 right below it. Do we pull back in, maybe go sideways some more here? I don't know, but the bottom might be in on S&P. We have a potential head and shoulders. If I go ahead and draw that for you, potential sort of head and shoulders here for the S&P. Left shoulder, here we come and have the neckline head. Here we have the head, and then here we could potentially get a right shoulder coming back down to this bottom trend line here before starting the move up here. So potential head and shoulders on S&P 500 on the futures. you do want to be watching this level, the bottom trend line. We've tested it right there. We dropped below it and opened back above it, proving to me that this is a level of support that people are watching, that people are buying, because obviously it is the bottom of the wedge. Now, you know, the line isn't perfect right now to the T. I'm gonna get rid of this fib retracement. And yeah, talking about the fib retracement, actually, I did have that fib retracement here on for a reason. Let me get rid of the head and shoulders. The fib retracement is basically, let me see, if I take a fib of this entire move up, this entire wave that we just got there, we're sitting, where are we? Sitting right at the 61.8, which is a major level of support. You know, some people call that the golden pocket, some people call it lower, but this is a very important fib ratio that usually is associate bottoms to, and especially when you reach that level forming max capitulation like we have been here, then it gets really, really interesting, because it tells us, you know, if we bounce off of here and we go to new all-time highs, I'm telling you, this thing could get a massive short squeeze when we break these all-time highs. Even if when we break these highs, it could get a massive short squeeze. But once we break these, I think it could get really wild. I think a lot of people are going to start turning bearish. If, of course, you know, we start moving up, I think a lot of people are going to start turning bearish around the peak level here on 4,800. And I think once we break that, I think it's going to go flying. And people are going to be thinking, wow, if only I knew that was going to happen. That's what always happens on the market. That's what happens in a short squeeze. US 500 here bouncing off of major support once again. I think it is also a major volume traded area for the S&P. So just a ton of support here. Once again, still moving up. We do have the bullish divergences there on the 1 hour that are now confirmed, as the 1 hour chart is, I mean, the MACD is in positive territory right there above zero, and the market is above the 50. Let's see if we can get those moving averages. Next level of resistance for the S&P is these highs sitting around 41.81. If we can get past those, you know, it's really the 200 period moving average up here around 4,200 that we'll be looking at. 15-minute chart of S&P, once again managing to bounce off of the 50 here in the 15, finding a little bit of sideways action around the 200 period in the 15-minute chart, which is the 50 period moving average in the hourly chart, the green line. Hello once again. And we're breaking back above it now. How high can it go? I don't know. But, you know, we did tell you and repeatedly warned you about the opportunities, you know, back up here. Once again, let me just switch back over to the NASDAQ. Back up here. Okay. I told you I'm not convinced the bottom is in. Throughout this rally, everybody was laughing at me on Twitter. Not everybody, but some people were. And then this happened. Okay. And now people, you know, I see a lot of people turning super, super bearish at these levels when I think a bottom is actually developing here. We are getting some sort of a reversal pattern for the NASDAQ. Does it hold? Does it not? I don't know. Do we come back down and fill this gap, or is that, you know, is this gap going to be left open for a long time? We are watching these levels. We are looking for higher lows to develop. Higher lows, higher lows. We want to see higher lows on a closing basis. Depending on the time frame, we want to see higher lows. With the wicks will show you how the market responded to demand. If it responds strongly, you're gonna have those big wicks that you're looking for. Okay, and if you can't close at a new low, but you get the wick at a new low and you form divergences, that's when it really gets interesting. So that's all I wanted to share for you for today. Let's just go ahead and take a look at the PCC and the PCCE. Nothing too crazy for now. If we keep going a little bit sideways here, we do have the Fed meeting coming on Wednesday and Apple earnings, I think, on Friday there. So big week. We also have job report, a bunch of things. It's going to be a very volatile week. Another very volatile week here for the U.S. markets. But, you know, that's how it is on the U.S. markets, you know, and we're not going to complain. The 10-year is also not making a new high. Okay, diverging from the S&P and the NASDAQ and the rest of the markets. Chart is still bullish. Momentum is still bullish. The trend is still bullish. You know, the 50 is still sitting under. We're not out of the woods yet. You know, this thing is not going to come. It might. I mean, I don't expect it to come crashing down super fast unless the Fed really makes it come crashing down super fast. But I think this is benefiting the Fed right now. So they don't really need to you know, make this come crashing back down. They're going to do what they have to do for the economy and, you know, whatever. But the 10-year right now is acting like a rate hike, and that is, of course, helping the Fed in their fight against inflation. So I don't know, maybe we go sideways here for a while because this chart is very, very bullish. You know, it's clean, super textbook bullish chart. It's going to take, I don't expect this to come crashing down super fast. It might. I mean, right here, we actually did, as you can see, but we did have a test of the 20 in a lower high form. Here, we haven't tested the 20 yet. So we're still looking to see what happens. And then we crashed back to the 50 and we came back and then it kept going down. But well, how much was it? 6.81%. And so yeah, that's all I want to share with you guys for today. I hope you enjoyed the video and I'll see you in tomorrow's episode. Peace.